Good day, Junior Techies. This is Mrs. Nominal speaking, and today we're going to look at the last activity, activity 4B, looking at the post-adjustment trial balance for this activity. So yet again, we start with pre-adjustment figures in the balance sheet and the nominal section, and then we move on to the adjustments. And as I said, we're going to focus this time on the post-adjustment trial balance. And the previous video focused on the general journal and very detailed calculations of each adjustment. So if you don't understand one of these adjustments that I go through very quickly in this video, please go back to the previous video for detailed calculations. So adjustment number 1 was the rent that had to be offset with repairs. So we had to calculate 1 month of rent that we need to record, and that's the 8,250. Then we must minus off the repairs and record repairs in our books. And then 5,750 Rand is recorded as a balance for accrued income. Then number 2, the bank charges that was incorrectly recorded as interest on overdraft. So we need to fix the error, minusing it off overdraft, adding it into bank charges. Number 3, we actually have to look at a debtor that was declared insolvent and he owed 1,900 Rand. So the total 1,900 Rand will minus off debtors control. Okay. And then the 228 Rand was received in cash, and that will go to bank. And the leftover 1,672 Rand will be written off as bad debts. Then number 4, an EFT was made or received from a debtor whose account was previously written off. So he does not exist as a debtor anymore, so it can't be debtors control. So he added to bank and bad debts recovered, an income account. Number 5, interest on an overdue debtor. We charged and we calculate 150 Rand. So we added to his account, and which is debtors control, and credit interest on overdue debtors. Number 6 was the advertising we paid in advance. So that's a prepaid expense that we have to record. Number 7 was the stolen stock. So there's 3 parts of recording. First, the 6,700 Rand that you have to record of stock, minusing off trading stock. Then the 80%, which equals to 5,360 Rand that we receive from the insurance company money. And please make sure that you do not offset this against the insurance expense. It has nothing to do with insurance expense. This 5,360 is an accrued income. And then the loss we need to record as 1,340 Rand separately. Okay. Then we have trading stock deficit. We start with an opening balance of 178,400 minus the stolen stock, minus the stock count amount gives us a deficit, and then part of that is also the consumable stores on hand that we need to record for the current financial year. 9, we need to still record interest on loan that is capitalized, so we add it to the loan and we add it to interest on loan. Number 10, we have interest on fixed deposit still due to us, therefore that's an accrued income. Because it's not reinvested, it's accrued income. If they reinvested it, it would have been debiting fixed deposit instead of accrued income. Then commission income is received in advance. So income received in advance or deferred income must increase, minusing it off from commission income because it's not this year's income. Number 12 is a correction of an error. We recorded it as business fund telephone expense, but it shouldn't be. It should be the owner's wife or the owner's expense, which is drawings. So I must take it out of telephone, minusing off telephone, adding to drawings. And then number 13, water and electricity not recorded yet. So I need to add it to water and electricity, and that is an accrued expense because it's not recorded yet. And then 14, the last one, the depreciation. Is I have to debit depreciation with the vehicles and the equipment amount, and then credit the accumulation for vehicles in the accumulation on vehicles account, and the same for equipment. So now we went through this very quickly. If you don't understand any of these calculations, please go back to the previous video where I had detailed explanations. Now we're going to look at the pre-adjustment trial balance. Now the pre-adjustment trial balance, the post-adjustment trial balance. Correction there, guys and girls. Post-adjustment trial balance. So we need to take the pre-adjustment figures and adjust them to get post-adjustment figures. And we're going to look at each individual adjustment and record them. And as we said, remember that one part of the adjustment is always in the balance sheet section. Okay, so the one part is, or part 1 is in the balance sheet section, and the second part is in the nominal section. And because for every debit there's a credit, so if the debit was in the balance sheet section, then the credit must show up in the nominal section, and vice versa. Okay, so just remember that. We are now going to look at the part 1 of each transaction first, the balance sheet part. And as I go along, I will mention the nominal section part as well, and you will see where it links together. Okay, so adjustment number 1 was the rent that was accrued and that needs to be offset against repairs. So the first adjustment is, sorry for that. Jana. The first adjustment is then the accrued income. So 8,250 Rand was accrued, but we need to minus 2,500 Rand off for the repairs. So the debit is then the 5,350 Rand that you get by getting the difference between 8,250 and 2,500 for accrued income. And then the second part will be, so this is the debit, which is in the balance sheet section, and then the credit in the nominal section will be for rent and repairs. Then adjustment number 2 only is the exception to the rule because it's a correction of an error between 2 expenses, and the expenses is in the nominal section. So there you will have a debit and a credit in the nominal section because you're working with 2 expenses. Then adjustment number 3 is the bad debts that we have to write off. So we start with debtors control, minusing 1,900 Rand of the total debt that the debtor owed. Okay, that's the debit. Then, the credit. Then part of the debit is the 228 Rand that we receive in cash. And then the rest, the 1,672 Rand, is the other debit in the nominal section. So then 1,900 Rand is split into 2. The 1,672 Rand for bad debts, the 228 Rand for cash, and that is how we get the total debt of 1,900 Rand written off there. Adjustment number 4 is a debtor that previously written off that is now paying money. So that is 150 Rand into our bank account. That's the debit and in the balance sheet section, and the credit will then be in bad debts recovered in the nominal section. Adjustment number 5 is interest on overdue debtor. So in the debtors control, we have to add 150 Rand for the debtor that we charge interest, and that's the debit. So the credit will be in the nominal section, interest on overdue debtor. And I'll show you all of this step by step in the nominal section as well. Then adjustment number 6 is the prepaid expense of water and electricity. So we're going to debit prepaid expenses in the balance sheet section and credit at the water and where are we now? advertising in the nominal section. Adjustment number 7 is loss due to theft. So when we record the loss due to theft, there's 3 parts. We have the 5,370 Rand, that's an accrued income, that is the 80% that the insurance company will write off. Now, not write off, the insurance company will give to us to cover part of the loss. Please note that this 5,360 Rand is not offset against insurance ever. Okay, so it's an accrued income, cash income to cover the debt. Then I must take off the 6,700 Rand from trading stock, because that's the total stock that is stolen, 6,700 Rand. And the difference between the 6,700 Rand and the 5,360 Rand is the 1,640 Rand that is recorded in the nominal section as loss due to theft. Then, number 8 is our trading stock deficit. So, our stock count is 169,800. So that stock count amount must be the balance of our trading stock. They must match. What you count must match your books. So you make your books the same amount. The difference between the 169,800 and these two amounts here, okay, the 168,400 minus the 6,700 is 1,900 Rand, and that is the deficit amount. So the difference between what was recorded on our books up to the end of this transaction, number 7, and the 169,800 is 1,900 Rand. So the 1,900 Rand records here in trading stock and in the nominal section as trading stock deficit. Then also number 8 is the consumable stores on hand. It's on hand 320. They tell you that is what is on hand. So that is unused consumables. And we need to add it here because it's an asset. I can still use it next year. And minus it off my expense because it's not used. And the expense must record usage. So I'll minus it off the expense in the nominal section. Then adjustment number 9 is interest that is capitalized on the loan. So our loan amount is 600,000 Rand plus the 91,500 Rand that we enter here, credit and debit on the nominal account section on interest on overdraft. Adjustment number 10 is interest on fixed deposit that is still due to us. So it has to go to accrued income, 1,200 Rand here in our balance sheet section, and interest on fixed deposit must increase in the nominal section. Then adjustment number 11 was commission income received in advance, so deferred income or income received in advance. 350 will credit here, and it was debit or minus off commission income on the nominal section. Adjustment number 12 was a correction of an error between telephone and drawings. So the drawings part will be in the balance sheet here. So the 240,000 plus 600 Rand, that should have been recorded as drawings. And then on the nominal section, minus 600 Rand off telephone, because we recorded it as telephone expense, but it was actually the owner's wife's. So therefore it must be drawings. So we just transferring it, taking it out of telephone, putting it into drawings. And then number 13 was water and electricity, which is not yet paid, so an accrued expense. So we debit accrued expenses, 3,400 Rand here in the balance sheet section, and we will credit accrued expenses in the balance sheet section, and we debit water and electricity. And then the last active adjustment, number 14, is the depreciation. So the credit leg is in the balance sheet section here with accumulated depreciation on vehicles that must increase with 44,000. And the same on equipment, that must increase with 11,100. And both of those amounts will go onto depreciation in the nominal section. I hope you followed. And now we're going to look at the nominal section, but yet again step by step from the start. So nominal section account, and we're going to go back right to adjustment number 1. So adjustment number 1 was the rent accrued that we need to offset. So we put the amount for rent and repairs in accrued expenses, and now we need to record the rent income and repairs on the nominal section. So for rent income, we have to add 8,250 Rand, and for repairs, we need to add the 2,500. And remember, for accrued income, we added 8,250 but minus 2,500. Okay, then number 2 was the correction of an error, bank charges versus interest on interest on overdraft. So we have to add it to bank charges and minus it off interest on overdraft, because it is not interest on overdraft, it is bank charges. So we're moving it from interest on overdraft to bank charges. Number 3 is the bad debts. So we wrote off bad debts and we received 228 Rand from the estate. So the total debt was 1,900 minus the 228 is the 1,672 Rand that I need to still record here as bad debts. And that is why I added here to bad debts. Number 4 is bad debts recovered. And now you'll see there is no account for it. So we have to add it in. Bad debts recovered, and that is 150 Rand. I cannot minus it off bad debts. So please do not minus it off bad debts. Okay? Matching concept. Must keep it separate. It's not a debtor anymore. It has already been written off as bad debts. So you've already added it into the bad debts account. You can't now record it into bad debts again. So keep it separate. Do not minus it from bad debts. Then number 5 is the interest on overdue debtor. So yet again, we have to add interest on overdue debtor because there's no account for it. And we're going to add 150 Rand there. And the debit was in debtors control in the balance sheet account section. Number 6 is the prepaid advertising. So we debited prepaid expenses and we must minus it off advertising because it's prepaid. It's paid for the next financial year. So I must minus it off this current financial year. Then number 7 was the loss due to theft. So the loss due to theft is the 6,700 Rand total of the stock stolen minus the 5,360 Rand that the insurance company will pay me cash back. So the loss is 1,340 Rand that I need to record. Number 8 is the trading stock deficit. So yet again, trading stock deficit is the opening balance minus the stolen stock minus the stock count amount, and that gives us 1,900 Rand. And remember, on the trading stock side, on the balance sheet, basically these two amounts are swapped around. The 1,69800 is the balance for trading stock, and then 19 was minused off. So how did I get the 19? Started with 178,400 minus the stock stolen minus what is counted physically gives me a difference of 1,900 Rand. Then consumable stores on hand is debited, and therefore I must minus it off consumable stores because it's still left over. It's not used. And the 8,800 Rand recorded usage. So I must minus off the unused 320. Then number 9, interest on loan. So interest on loan must record, and there was no account for it previously, so I need to just add it in. Interest on loan, total 91,500 Rand. Number 10 was interest on fixed deposit. So interest on fixed deposit was still due, so I need to just add the 1,200 Rand to interest on fixed deposit. Number 11 was commission income received in advance. So it's income for next year but that I've already recorded. So I must take it out of the 43,550 and minus the 350 because it's not for this financial year. Then number 12 was the correction of an error where I recorded the telephone bill as business expense instead of drawings. So I must minus off telephone and we added it into drawings on the balance sheet section. Water and electricity is number 13. So we had to, it was an accrued income, okay? So we have to add, okay, not minus, please correct there. We have to add the 600 Rand here because it was still accrued, okay? So we need to add it back. It still needs to record for this financial year. And then lastly, we need to record depreciation for equipment and vehicles. So the 44,000 was for vehicles, okay? And the 11,100 was for equipment. So there's a total depreciation of 55,100 Rand. And then we are not quite done. So now we need to find or calculate all our final balances and copy over the unchanged amounts from the pre-adjustment trial balance. So yet again, if I now look at the completed post-adjustment trial balance, you will now see that I've recalculated all the bracket amounts and I've copied over the unchanged amounts. And then that's the nominal section, the same thing for, hope you didn't miss anything. And then eventually, what is a trial balance about? To double check our double entry system. So our debits must equal our credits. And if that happens, it means we've done it correctly. And we can move on. We have done all our adjustments perfectly correct. So, thank you so much. This has been a fun year and a good year to learn with you. And if we look at this final sort of diagram here, we've done the pre-adjustment trial balance. We've done our journal entries. We've posted to the general ledger as well, post-adjustment trial balance. So, the next Module 10 will look at closing transfers. Thank you and goodbye from Mrs. de Mailon.